Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome to Market Today. I'm Shail Bhatnagar. It's a very, very important day. We changed the month. We are on the 1st of Feb. Therefore, at 11 a.m., the markets will be reacting to what Finance Minister Nirmala Sitharaman unveils in her interim budget document. Apart from that, they have a host of other stocks to react to. One, the FOMC meet that has happened overnight within the US Federal Reserve. No chances of a rate hike. Then, of course, we have the volume numbers coming in from the auto, cement and the steel pack, and of course the Paytm saga. All that and more, that will be after the headlines, but Sakshi is with me. Sakshi, you're all geared up for the interim budget.
A very good morning to you, Shail. Yes, it's a big day. We've been all waiting for this interim budget, and it comes right ahead of the big event, that's general elections in May. So this time around, the interim budget will only seek to have some funds from the Consolidated Fund of India to fund the government's expenses after the 31st of March. That's the end of the current fiscal year for about 2 months or till the time the new government is formed. And therefore, Finance Minister herself has doused some of the fire by saying that no big bang announcements or stellar announcements coming in. It's only a vote on account, and therefore some of the extension of the previous schemes and some more allocation could be coming in on some themes. But I still believe that, you know, Modi government is famous for some of the surprises. It did spring some surprises in 2019 by introducing a new scheme, PM Kisan Yojana. Then it did some tax tweaks as well, increased the standard deduction limit, and all of those things were then. And therefore, this time around again, the expectations are pretty high, Shail, that, you know, something should be coming in for the common man.
Okay, ladies and gentlemen, what you see in front of your screens is Finance Minister Nirmala Sitharaman reaching the Finance Ministry. These are beautiful roads in Lutyens, Delhi. We've had strong rains all of yesterday and all of night tonight, and the weather's beautifully clean, especially in the central part of Delhi. That's, I think, the security officer trying to tell TV cameras to please stay a bit away. But nevertheless, what we'll do, ladies and gentlemen, we'll start with the headlines and then we'll get neck deep into what the interim budget is likely to bring to you. The headlines first. Indian stocks are headed for a volatile session on Thursday as Finance Minister Nirmala Sitharaman gets ready to unveil the interim budget at 11 a.m. Meanwhile, the US Federal Reserve rules out a rate cut in March, saying inflation is yet to slip below its acceptable threshold. Overseas cues are weak. Panicked investors will hit the sell button on Paytm after the Reserve Bank of India issued severe restrictions on its online payments bank, banning fresh deposits in customer and prepaid accounts and stopping banking facilities from February 29th. Customers will be able to withdraw their deposits, the regulator added. Paytm to hold a press meet at 3:30 p.m. today, the stock to remain in focus for traders and investors. A very warm welcome to you, ladies and gentlemen. On Market Today, Sakshi and me will be piloting the interim budget document today, as also the rest of the markets, like we do on every single day. But for now, I think the plate is loaded with a lot of events, a lot of expectations as far as 1st of February is concerned. Of course, we have the interim budget. We have the Indian reaction to what will happen in the markets post the FOMC meeting in the US Federal Reserve. Like I mentioned, volume sales for auto, for cement and steel, the Paytm saga, and ladies and gentlemen, the kind of enthusiasm that the market has built up before the budget. Sakshi.
Absolutely. And, you know, there's a lot to track. It's going to be an eventful day completely because it's overseas cues that we are tracking after Jerome Powell-led US Federal Reserve kept the interest rates unchanged for the fourth consecutive time, and following which we did see that the US markets reacted on the downside very sharply. The S&P 500 fell the most in 5 months. The Nasdaq slumped about 2% post the Fed decision as well. Of course, back home, we've heard a big decision last evening from the RBI putting restrictions on Paytm's payments bank and saying that no more fresh deposits will be accepted by Payments Bank of Paytm starting February 29. No more credit transactions, top-ups, wallets, or even FASTags could be seeing any more inflows. This is a big dampener that's coming in as far as Paytm is concerned, and that is one stock that we will be watching on top of our radar today. But you know, of course, the focus will largely be on the interim budget and what the big announcements can be. But Shail, if you could help all our viewers really understand the backdrop at which the interim budget is being presented, what does the macro picture really look like as of now?
Okay, Sakshi, let's start with the capital markets because that is what we deal with on a very regular basis. From April onwards till 31st of Jan, you've had a fantastic rally across the mid-cap, the small-cap space. There is nothing to complain about. I'll give you some wonderful statistics. We are, of course, in a buoyant capital market, but if you see the last 3 years' performance in the global space, the Nifty has appreciated 48%. The Sensex has gone up by 44%. Now compare it with the Dow and compare it with the S&P 500. Those changes are just 24% and 22%. So the Indian markets have outperformed their US peers to the extent of about 100% over the last 3 years, and that's because of a slew of policy changes that have impacted stocks positively. Let's look at some of them. When you look at India, it's an island of financial stability, Sakshi. In a crisis-ridden world, we have 2 wars going on, one in Europe between Ukraine and Russia, and one in the Middle East between Israel and Hamas, which shows all signs of expanding. Despite that, you've seen a very strong island of safety kind of a designation that's hit Indian capital markets, and they've done phenomenally well. Now, let's look at how the GDP has expanded over the last 3 odd years, and that is the background against which Indian stocks are now moving. Nirmala Sitharaman reaches the North Block. This is the Finance Ministry entrance. You will see her coming out shortly with a briefcase, and she will be going to the new Parliament building. This is, ladies and gentlemen, the 17th Lok Sabha, and the last session of the Lok Sabha starts before we get into electoral mode. But coming back to the background, so you have 6% predictable GDP growth, Sakshi, and look at how the tax buoyancy is there in the country. That's probably changing the, how should I say, the Bhagya Rekha of Bharat. So Bharat Bhagya Vidhata is actually the tax collection, Sakshi. The GST number, the average number is 1.66 lakh crores as far as the monthly number is concerned, and that's 12% higher over the average of 22-23 financial year. So strong taxation, very good GDP growth, aspirational growth, and the runway to the growth is phenomenal, and that is the background of the interim budget. As you very rightly mentioned, it's a vote on account. The expense sheet between say 1st of April to say end of May is what the government will ask from parliamentarians, and that is how the structure is. But we have 3 fantastic reporters lined up in the North Block. We have Karishma Sudani, who tracks the Finance Ministry. We have Chetan, who looks at the broader budget numbers, and of course Tanya is in Mumbai. But coming first to you, Karishma, what is the interim budget all about? What are the broad contours of this budget? What can be expected on the political side? What can be expected on the economic side?
Shail, firstly, I'm going to try to be as loud as possible because there is a lot of hustle bustle happening here. Clearly, you see Finance Minister Nirmala Sitharaman just entered the ministry, North Block, followed by the creme de la creme, which is her A team, the group of secretaries who also entered. Now, what is expected out of a water account budget is that it's more of an advance grant that government takes in before the election, during the election year, before, of course, the full government kicks in again in the month of April or May as per the dates. But in the water account budget, it's very important for us to understand that despite the fact that it's an interim budget, it is going to be extremely important. It's going to focus on key 4 sectors that even Finance Minister has been mentioning about. It's women, youth, poor and farmers. Expect big social reforms policies coming this way. In fact, government is confident that they are going to try and elevate and expand these social reforms in terms of the budgeted allocation for the upcoming year. But what is also expected, Shailendra, and this in fact, if you look at the previous 4 vote on account budget, major tax reforms have come in. So expect some kind of relief and exemptions under the new tax regime for taxpayers, so that they move to that regime as soon as possible and more confidently. Besides that, it's also expected that government could make in some announcements for job employment for the youth, which could yet be another important key area of focus.
There is the other important fact that all the economists and analysts will be tracking. The big disinvestment number, which has been something that the Modi government has been falling behind on achieving over the last few years. This time again, there was a muted number, 50,000 crores. We are still at 12,000 odd crore rupees. Are we going to expect any kind of inching up, any disinvestments of the PSUs in this interim budget?
Sakshi, absolutely. If you look at the disinvestment target that government has already set. Now, let us understand, Sakshi, this part that government has always been setting enthusiastic disinvestment targets. Last time they were looking at about 51,000 crore, but only close to 11,000 crore have been achieved, and government will likely, in fact, revise the target today for FY24. But going forward for FY25, we're picking up from our sources that government is still going to maintain an enthusiastic target. What is going to be up for the market, for investors, is IDBI disinvestment. They are very keen to get this off their table. In fact, LIC has also been in cooperation with government on this. So government is going to first take that as their priority, and to be very honest, that could come in as soon as even before this financial year ends, because the process is right now with RBI and they have to give a fit and proper criteria. Post that happens, the government will start off the process on papers, and that could be done, get done away with. In fact, government is also keen to sell its stake off in Concor and Shipping Corporation of India. Expect some kind of difficulties in Concor. We may in fact hear a word today from Finance Minister, if not in the budget speech, definitely in the post-budget press conference, where we could try and get some kind of idea on what kind of assets are they trying to prioritize. Besides this, they may also look at doing away with the residual stake in Hindustan Zinc. As you know, they've been talking with Vedanta. It's close to about 29% that government is looking to set off. We also have a few other minor subsidiaries that they may look at doing away with, but disinvestment is going to be the key focus, and that is also important for government with the kind of fiscal deficit target that they look at.
Okay, thanks a lot, Karishma, for all of those updates, and we will keep coming back to you to really understand what the live action is looking like right ahead of, right in front of the Finance Ministry, before the Finance Minister now heads to the Rashtrapati Bhavan, and then thereafter to the Parliament as well. Shail, the other big expectations with the key sectors, with respect to the key sectors, especially the renewable space, are also high. The Prime Minister gave us some of the hints with respect to 1 crore households with the solar power panels as well, and therefore there is an expectation that this could be on top of the radar, and therefore we've been seeing the entire power space up in action over the last 6 months odd.
Yes, actually, and that's got to do with a lot of guarantees that the government of India has given to reduce its carbon emissions. The best way to do it is to move slowly but surely away from thermal. Therefore, you see this change to sort of get the consumer to be the decider when it comes to how he uses or utilizes his electricity costs. So if you are able to put a solar rooftop and it pays off by itself over the next 5 years, that's a very big plus. It helps you to reduce carbon emissions. Apart from that, you have the EV space, which is doing dramatically well. So that, coupled with the renewable thrust in India, is what is something that this document might unveil. This is a very, very big background note, Sakshi, as far as even the stock markets are concerned. You've seen dramatic rises in stocks such as NTPC, in Tata Power, and these are, traditional thermal providers of electricity at our home. They are changing their tack, they are changing their internals to become wind and solar power generator over the next 5-7 years, and that is what is remarkably dealing with the whole space of EVs as well as renewables. I'm just wondering whether Chetan Bhutani is with us. PCR, could you just confirm that? Okay. Ladies and gentlemen, what we'll do is we'll wait for Chetan to join us from the North Block, but let's look at how the markets are headed. We have Rajat Sharma, CEO of Sana Securities, and Brijesh Ail, Head of Technical IDBI Capital Markets, joining us. A very warm good morning to you, ladies and gentlemen, and I believe Mayuresh is also with us. Mayuresh, good morning. It's crystal clear in Delhi. We've had a wonderful rain all of yesterday and last night. So the vision and the skies are absolutely clear. What are you expecting from the interim document?
Morning, Shail sir. Morning, Sakshi. I think the vision for India Inc. and the vision for Bharat also looks very, 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 very buoyant, Shail sir, over the next few years. So I think very, very optimistic in terms of how our economy is headed. And obviously, I think in terms of the vote on account itself, our take is an increased allocation in terms of infrastructure spending, which has been the forefront of this government over the past few years. So I think spending in terms of capital account on infra manufacturing projects will continue. Atmanirbhar Bharat will have a huge amount of say in this budget as well. Obviously, the focus will also be a little bit on rural India because we've seen deficient monsoons and rural India has been struggling. So how do you probably get farmer incomes up and probably ensure that rural India does not bear the brunt in terms of higher inflationary cost in terms of their discretionary savings and spending as well. So I think a dual tone in terms of infra spending, a dual tone in terms of farmer-stroke rural allocation, and at the same time maintaining fiscal prudence. I think that will be the benchmark that this budget will probably present.
Okay. Very good morning to all of you. Brijesh, let me come to you now. I think all eyes from the stock market traders and investors will be on you to find out which are the trades that they should be picking right ahead of the interim budget. We were discussing a whole host of sectors that could be in focus. Of course, the hopes are high, but we have to just wait for the time being to really find out what really comes out from the docket that Finance Minister will be carrying. Your top 2 stock ideas for the day.
Yeah, morning, Sakshi. So I think with the budget expectations, I think Gujarat Gas is one stock which has seen a very good breakout in yesterday's session. So I think that momentum will be seen in that particular counter. I would be betting for 620 as the trading opportunity in the Gujarat Gas with a stop loss of 563. It's a very good clean breakout from the derivatives as well as the technical perspective. And one more was the Ashok Leyland, which is again giving a very good breakout from 175 levels. It's again a FNO bet. I think we should be heading towards 185 to 190 levels. So this both can be a pre-market trades which one should be keeping a watch on.
Okay, we'll keep an eye out on both these stocks. Rajat, good morning to you. Tell us, what is on top of your wish list today as far as the interim budget is concerned? Are you hoping for some big bang announcements or will it be a non-event?
Yeah, I think it's, first of all, good morning. I think it's likely to be a non-event, although, the last few days I was looking at what the government can do in an interim budget. And, it's just a convention that they cannot pass a full budget. There's nothing that stops them from doing that. But having said that, the way the commentary has been coming out, it would be how an interim budget has been always, that the government will just not make any big bang announcements, and they wouldn't want to do anything that you know makes anyone else feel that they were trying to be very pro people this time around. But if I start counting the things that I have on my mind, there is so much that the government has to do in terms of you know, simplifying the capital gains rates. There's a lot of demand from the capital markets in terms of what they've done with the taxation on debt funds, and now debt funds where people take a lot of risk by investing in these corporate-oriented funds are
Right,
now
sir.
taxed at same rate as fixed deposits, and uh, the same has happened with foreign funds, where the Indians only had one way to invest in foreign funds, which was buying mutual funds which invest in foreign stocks, and now they're also taxed at par
Right,
with
sir.
debt funds, which is very different from equity. There's been a long demand that capital gains on equity should be, taxed a little better. So, one of the things we keep hearing is that, if you hold your stocks for 1 year, tax them at 10%. If you hold it for 2 years, tax them at a lesser rate. And if you hold them for 3 years or more, don't tax them. But then I really doubt if the government is going to do anything this budget around any of these things. So to
Right, Mr.
me,
Sharma.
this budget will be a non. I think every budget is a non-event. There are other things that you should focus on. There's other things which will drive the market today as well as it always does.
Okay. Mayuresh, coming back to you very quickly, how do you see the sentiment on Dalal Street ahead of this interim document? We also have to react to the FOMC meet and, of course, the mess up that is there on Paytm. But the overall structure and then your view on Paytm.
So I think the enthusiasm and sentiments on D Street continue to be very robust, Shelza, to be very frank and honest. And therefore, in terms of what is expected to take place over the next few quarters, as far as earnings are concerned, which becomes the base case scenario for markets in general, should grow at a steady compounding pace across sectors. And therefore, I think the kind of premium multiples that we are deriving at this juncture on a 1 year forward basis can very well sustain in lieu of how China is expected to and how most of the developed world macros are expected to shape up. You were beautifully explaining how Indian macros have evolved, and I think they will evolve even better for the next few years. Having said that, I think the entire perspective in terms of the market sentiments when it comes to what probably happens as far as the budget delivery is concerned, I think that should probably be on track. So I think not great expectations from the budget. Obviously, every industry, every sector has a say in terms of what can come to them. But I think maintaining a balance is equally critical and very, very prudent at this juncture. And last but not the least, I think Paytm and the clarifications that comes through, a 300 to 350 crore hit in terms of the annualized EBITDA. They're moving their nodal bank accounts to other banks as well. I think the sentimental effect is going to be there as far as numbers are concerned. They were just showing signs of improvement, and I think this whole headwind has probably come on to hit them hard as far as forward numbers are concerned. So yeah, I think the stock will get beat down, and probably we need to wait for clarity in terms of how progress is made over the next few months.
Right. We do have Akshay Bhagwat now joining in, Senior Vice President, Derivatives Research at JM Financial. Good morning, Akshay. 2 minutes to go for the pre-opening trades. Your two top stock ideas for today.
Good morning, Sakshi. Thanks for the invite. Well, volatile day for the budget, but I would be positioned on the buy side of trade here. One is MCX, which I would look forward to. I believe the AI and the digital infrastructure would be one of the possible themes for the budget, and there can be some gains for stocks which fall in this sector. So at 3414, which MCX closed yesterday, I look forward to targets of around 3550 to 3600. The support is around 3300, so stop loss below your support. You can consider buying BMCX. And the second trade I have is from the defense pack here. I would look at BEML. I believe defense also is one of the sectors which might do well or have some sops in the budget. So at 3505 where it closed yesterday, that would be a buying for me with a target of 3700. The support is 3400 for the stock.
Right. BEML is something, Sakshi, that we've discussed yesterday also. It was the top pick of Milin Vasudev, record high on that counter. And things are looking better and better as far as Akshay is concerned. Okay, ladies and gentlemen, the pre-open markets are there. The index is open 58 points lower. First and foremost, Paytm, Sakshi, down 20%. 609 in front of us. That's very painful. Now let's look at the rest of how the markets have opened up. Let's look at the index heavyweights. I want to see what Reliance is doing. In the green, 19 rupees higher, 28.73. This one is on a tear already at a record high. HDFC Bank, surprise, surprise, 1% higher, 14.78. Let's look at Infosys. Infosys is flat 1660. So 2 out of 3 index heavyweights, the super heavyweights, are in the green, Sakshi. That's good news for the market. Tata Motors, no surprise there, 2% higher, a change of digit, 90190. How about TCS? 2% higher. This is a good opening, Sakshi, 3893. How about the two corporate sector banks? ICICI Bank, 3 rupees lower, 1025. Axis Bank flat at 1067. Let's look at L&T. This was in pain yesterday because earnings weren't really good. 1.1% higher, 35.18. Let's get back to Paytm. Again, no change, 19% lower. I'll just take a very, very quick detour to FNO space and let's look at what's buzzing there. We have a super strong panel today. We'll pay attention to them instead of prices. Okay. Shree Cement 10% higher, 31,411. We normally don't mark this stock, but it's going great guns. 4% higher on Z. Godrej Consumer Product 3% higher, 1,200. Let's look at the top losers. Manappuram, GMR Infra, Bharti, Airtel down between 2.5 and 1.5%. A quick detour to NSE 500. Let's look at the top gainers here. We have Ajanta Pharma. 2313, 6.5% higher. Suzlon kicking it away, 4820, 5% higher. Remember, it had come up with a fantastic set of numbers yesterday. That's pretty much how it is. Let's get back to Market Watch and look at the index heavyweights. Sakshi, the good news is that 9 out of 10 index heavyweights are in the green. Hindustan Unilever is down about 0.8%, 2462, and nothing much to talk about as far as the pre-open trades are concerned. Nifty 65 points higher, 21,780. To you, Mayuresh, this is a fairly decent opening given the fact that you have a reaction, a negative reaction from overseas when it comes to the FOMC meet. What are you looking forward in markets today in particular?
So, Shail sir, I think apart from infra capital goods that we've been discussing at nausea, I think logistics and a few of the infra-stroke manufacturing plays is something that you can still look at. Within logistics, Gateway Distributs definitely stays on our watch list. Obviously, the expectations in terms of cold storage, the expectations in terms of logistics contributing even higher to the overall GDP. And as the dynamics change for the industry as a whole, they can contribute 1% more in terms of the overall GDP growth. For Gateway in particular, as the Western dedicated trade corridor comes to complete fruition over the next couple of quarters, over the next 2 to 3 quarters, I think a large part of their business in terms of the exit movement, in terms of the railway rakes and the movement thereof can be substantial in terms of volume growth. They've got ICD, CFSs, 5 of each on the west and the east coast as well. 31 odd rakes, not too much of debt on their balance sheet, and also cold storage subsidiary in the form of Snowman Logistics, where I think some allocation and focus will also be there in the budget. So I think logistics as a space is something to look out for. Within that, GDL is something that remains on a watch list. Within the broader markets, I think the overall theme for infra capital goods continues. And therefore, I think construction equipment companies as a space is something that we continue to like. The other element is also some few spaces within the mid-cap space. A stock in particular, something like Pennar Industries, which is into the automotive part of the business, railways, where it provides critical parts. We're just talking about solar panels, but this company is probably into the more EPC part of it as far as solar structures are concerned. Panel prices have actually crashed down at this juncture. So I think more of the solar structure guys, EPC guys, where large orders can come through, and where there is a large potential of growth, both domestically as well as globally. I think all these stocks, which are probably part and parcel of infra, capital goods, construction, can also be kept on their own.
Okay. Let me just quickly mark out a few stocks, especially from the railway space. This entire space will be in focus in today's trading space, especially because of the kind of focus, the thrust this government has put on the railways and the modernization. There is an expectation of higher allocation there, and you've all seen the stocks, turn multi-baggers over the last 6 months odd or so. So IRCTC is opening a percent higher, 987. You have IRFC. Let's look at that too. How is that opening up? I think it's again up into the green. You also have RailTel, that's been a multi-bagger. Rail Vikas Nigam again in front of you, 1.2% higher, 312 at the current levels for this one. Then you also have the wagon makers, Titagar Rail, Jupiter Wagons. We'll all look at that as well. RailTel is opening higher as well. So you have 0.5% uptick coming in on this one, Titagar Rail, 1099 coming in on that one. Let's look at IRFC. That's the one that has really stunned everyone with an upper circuit after upper circuit almost on an everyday basis for many consecutive sessions. So let's look at that one. Yes, 2.7% higher in trade, 180 currently. Let me just take your view, Akshay, on the rail stocks. How would you be trading them right out of the budget now?
Yes, rail stocks have been in the limelight, and most of these stocks have had their fair share of up move. Now, I would not be taking a buy position in majority of them because from the current position where they are, a couple of stocks only look good from a technical perspective. You can take a bet still at the given juncture for the budget day. One is IRFC, which is trading at 175, technically still strong. It has a potential to go all the way up till 200. It's building up a support base at 160. So consider IRFC as your first buy, and RailTel, that's the second trade which you can look forward to. Here again, a strong chart structure, a consolidation at around 437, possibly setting up for a breakout above 440. If it does, steady yourself for a target of around 475 to 480 today itself. The support area is around 400. So RailTel and IRFC are the two names I would bet on for today's budget day.
Okay, and both of them are looking good in the run-up, at least till the budget. IRFC in particular, I think the stock has more than doubled in the last 45 trading sessions. But what we'll do is we'll take a mild detour. Tanya is joining us from Mumbai, in fact from the Bombay Stock Exchange building, to try and tell us what are the expectations from the interim budget that the capital market has. A very good morning to you, Tanya, looking bright and shiny.
Absolutely, Shail. Very good morning to you too. It's the big budget day, and I am standing right outside the Bombay Stock Exchange. And the thing is that there are low expectations this time around. Experts believe that market will wait for the regular budget and, of course, the general election outcome before getting bullish. But however, it's going to be a capex focused budget this time around. Focus would be on infra and rural sectors. PLI schemes could be, extended to a lot of sectors. This is one of the major expectations. Everyone is hoping for tax cuts, and if we talk about investors, they want rationalization of capital gains taxation for domestic mergers. They also want reduction or removal of securities transaction tax, that is STT, and of course long-term capital gains tax relief as well. They also want FM to elevate double taxation on dividends, and they want her to encourage the Indian IPO market as well through ease of listings and taxation. But of course, Shell, the focus would be on defense and railways too. Remember, we have been talking about these sectors and how, you know, so many stocks from these sectors have done multi-baggers, all these choda packets, bada dhamakas, who are actually not choda packets anymore. But we have power, utilities and renewables as well.
Absolutely, Tanya. We'll get back to you, Tanya. Let's look at the pre-opening trades that have settled down. We have the Nifty now 0.25% higher. That's settling at 21,780 currently. And then we also have some of the stocks like from the Tata Group. Tata Motors topping the charts as of now as far as the pre-opening space is concerned. Almost 2% higher in trade. Titan up by 1%. ONGC, NTPC, Coal India. Remember, the entire energy pack is going to be in focus. That looks like to be in flavor today. And of course, the pharma pack, Divis Laboratories, Sun Pharma, all of them picking in pace as well at this point in time. Sectorally, the action looks bright. All the sectors up into the green. Barring the flattish trade that you're looking at on the IT space. From the broader markets, again, a lot of buzzers in the pre-opening space. You have data patterns ticking higher, 7.5% up. Ajanta Pharma, Infibeam Avenues, Godrej Consumer Products. These are the stocks that are buzzing. But let me quickly take a view from Rajat now. Rajat, on Paytm, that's the one that is going to be in the pain point today. Already in the pre-opening trades, a 20% lower circuit after yesterday's big announcement from the RBI have come in. And you can actually see Finance Minister right there on your screens, ladies and gentlemen, with the digital document of the interim budget, you know, in her hands, covered in that red envelope and with the emblem on that, bright and shiny, and the entire team of Finance Minister Nirmala Sitharaman, the budget makers, posing right ahead for the media. And in that photo op, you can all see smiling faces and looking ahead with a glimmer of hope that they have created a budget for the future of India, for the economic growth right there. Let's keep our fingers crossed and hope for some, you know, hopes to be met from the Aam Aadmi this time around as well. So you do have the entire team over there with the Finance Minister now walking from the Finance Ministry. They will now be proceeding for the Rashtrapati Bhavan to get President's signature on the interim budget document before presenting it into the Parliament as well. And then Finance Minister will be proceeding to the Parliament. There will also be in between the Cabinet meeting where the Cabinet approval will also be taken on the budget document. And thereafter at 11 a.m. we will see the Finance Minister presenting the budget.
Right, Sakshi. What we'll do is we'll take a very, very quick view on Paytm from Mr. Sharma and then move on. Rajat, your view on a 20% downtick on Paytm, what would you do? Very quickly, please.
Yeah, no, you know, to be honest, I have this stock in my portfolio, and I think 20% fall the way we've seen today would probably be a good reason to buy this stock, because, you know, the news that came yesterday, I guess the RBI feels that the payment system is not so robust for online apps to. But look, Paytm does not really get its money from, I think 61% of their revenue comes from payment services, which is what they charge the merchants. So I don't think this will have an impact. This was never a big part of their pie, which is, you know, lending and, if you may, the
right,
banking
Mr. Sharma.
business. So I think it would be a good day to buy it.
Absolutely. Mayuresh, what would you do? A 20% downtick on Paytm?
No, would wait for more clarity to emerge, Shail sir. So I will wait.
Okay. The clarity will come from 3:30 p.m. onwards when the company will hold a press conference and an analyst con call. But for the moment, the Nifty settled 55 points higher at about 21,780. And Sakshi, there's been a huge block. This is in the pre-open. This is for Policy Bazaar. Remember, the earnings came day before yesterday. About 2,400 crores worth of shares are about to change hands, and that's about 2 crore 44 lakh shares at 992.80 a piece. So this is the transaction that will sort of get the market going. And of course, the company had come up with a fantastic set of numbers. Let's look at some other numbers that are coming. Let's look at what High Beta has done in pre-open trade, and then we'll push forward. You have Ambuja Cement 1.3% higher, 568. Geo Financials is something, Sakshi, we'll need to look at because the market grapevine is any kind of negativity on Paytm will probably help this digital giant to gain a lot of traction. 251, 1.1% higher. And we are some seconds away as far as pre-open trades are concerned. But coming to you, Mayuresh, very quickly, Geo Finance, will it benefit from Paytm's pain?
Probably yes, and I think the long-term structure probably also looks attractively placed. So anybody holding should watch.
Okay, Akshay, your very quick view on Geo Finance. One line, please.
Technically very strong for long term. Continue to hold. I'm looking for targets of 350 plus. Trading short term 240 to 260 range. Accumulate within this range.
Okay, beautiful. Ladies and gentlemen, we are all set for the pre-budget opening of the market. Remember, the Nifty settled 55 points higher. There's a green tick on Nifty Bank, and I forgot to tell you, it's the weekly expiry of the Nifty as well. So lots of interesting things lined up on the markets. And we have the first quote, ladies and gentlemen, 21,760 on the Nifty, 34 points higher. I just want to see very quickly what Paytm is doing. 19.99% lower, 152 down, 609. This is the first circuit. Market watch for you. Let's look at what's clicking on the index. Reliance taking it away, 8.2 rupees higher, 2860. I want to see what HDFC Bank is doing. It's in the green, 2 rupees higher, 1464. How about IT stocks? Infosys 0.5% lower, TCS flat. I want to see what L&T is doing. It was in pain yesterday, flat 34.76. What's moving? Tata Motors, Sakshi, 1.2% higher, 895. We'll shift focus to the FNO space. The Nifty is flattening out, just 12 points higher. The top gainers in FNO is Shree Cement, 29,800 for you, 4.5% higher. Naukri, 5168, 2.9% higher. None of the stocks are doing pretty well. Okay, National Aluminium, 150.3, 1% higher. Bank of Baroda, 248, flat. You have L&T Finance, 174, up 0.7. Tata Motors, up 1.2. India Cement, up 1.2. Let's look at NSE 500. There's not much of a move in the market as of now. Okay, you've been tracking Infibeam. That's the top gainer on NSE 500, 8% higher, 38. Data Patterns, you marked 5.6% higher, 2019. And let's look at the defense space, what's moving there. In the green, I want to see BEML. Yes, 3516. Remember, this is the top pick from Akshay. Zen Technologies up 5%. That's the circuit, 880. Cochin Shipyard, 2.5% higher. Midhani, 1.3% higher. How about Garden Reach, 0.5% higher? What's happening in railways? Okay, Sakshi, I tracked 22 stocks. 19 of them are in the green. The top gainer, IRFC, 2.3% higher, 179. Why am I not surprised? Railtel, 442, 0.9% higher. So this is a fairly decent opening, 20 points on the Nifty, 60 points on the Nifty Bank in the green. IT is in mild profit booking. I won't be worried about that. NSE 500 in good shape, 34 points higher, 19,838. Akshay, coming to you first. Anything that catches your fancy on the long or the short side?
Well, the market is just studying itself for the event. Here again, you have to look at the names which are the budget names. Specifically, as you mentioned, it's the rail counters which are hogging the limelight. I would again bet on IRFC and Railtel, which I discussed at the beginning of the show. These will be my top two bets moving into the budget day.
Okay. Let me get your word, Brijesh, on the stocks that we are looking at, which are buzzing from the auto space. Of course, you mentioned Ashok Leyland. We are also looking at several others. Eicher Motors now topping the charts on the Nifty, 2.5% higher. Tata Motors follows. M&M, Hero Moto, that's moving higher. Maruti Suzuki. So the entire auto pack is in top gear, 0.9% higher for the Nifty Auto Index. How would you look at the auto names right now?
I think this momentum is going to continue. I think we are expecting the auto numbers. So Eicher Motor is something which is given a very good reversal. So I think this continuation will be there. 4,200 plus should be what we should be looking the Eicher Motor in the next couple of days, followed by the Tata Motors, which is already up I think the momentum will be very strong in
Recording in
Tata
progress.
Motors, Aisha Motors, and from the trading perspective, Ashok Leyland. So I think we should, these three would be the best pick.
Okay, so the entire auto space will be in action today. Remember, monthly sales numbers will also come out periodically, and we will continue to tell you all of those as well. Mayuresh, I wanted to take your view on the cement space as well. Of course, the large part of the capex thrust usually goes to the infra spending from the government, and this space is again going to be in focus today. I can see from the F&O action, JK Cement, Shree Cement, all up in trade, and the entire space has been buzzing before, and I've asked you this before too. What do you really expect from the interim budget? Something that could really help the cement stocks even pull higher?
I think allocation towards infrastructure, allocation towards urban and rural affordable housing, I think that's going to be the key impetus for the sector as a whole. And if there are further allocations towards these sections itself, as the interim budget announces, I think a large part of the volume growth, volume offtake should probably take place over the next few quarters. Again, numbers have been pretty reasonable and decent for most cement companies. JK, Ultratech, Ramco is a whole from us.
Okay, Sakshi, I think the markets are fairly stable ahead of the main event, which is at 11 a.m. And of course, the weakness that was coming in from overseas cues has not impacted prices as of now. It's absolutely flat trade. Let's get Brijesh into the conversation. Brijesh, anything that you've caught on the long or the short side in the 5 minutes that the markets have opened? What looks good to you?
I think from the auto space, Maruti is something which is giving a clear-cut breakout. So I think that momentum will be there in Maruti. So that would be the one. Somewhere close to 10,500 would be the bet for the Maruti. Second one is the Somani Ceramic, which is again, I think, clear-cut breakout from the range. It's a buy set towards the 760 mark. So I think this two can be kept on the list.
Let's look at prices, Sakshi, in terms of turnover. IRFC taking it away, 1.4% higher at about 177.70. Already 22,000, about 220 crores worth of transactions have happened. The two top traded counters are Indus-Star and IRFC. IDFC is thankfully in the green. Surprise, surprise, Infi-Beam is showing a transaction of 138 crores, which is phenomenal, 1.11% higher. That's very, very sharp. You have the entire, PSU space, which is buzzing. There's no surprise there. Let me just tell you some good PSU stocks which are clicking in the green. Some we traditionally not look at. Okay, so this is the budget play. You remember Karishma talking about Shipping Corporation of India. This is 6% higher, 224. Ireda, again 5% higher. I have no clue, but that's what the price is. BEML, 2.5% higher, 35.81. Cochin Shipyard, 932, 2.27% higher. IRFC, HAL, Chennai Petro, Engineers India, all up between 1.5 and 1.7%. Coming to you, Mayuresh, on a regular basis, a 5% uptake on Ireda. What is happening?
I think $1 million question, Shail sir. But I think the entire power financing theme is very much in focus even now. And I think the expectations in terms of a 10 lakh crore outlay, a substantial part of which will be provided by these power financiers, is going to probably keep this entire theme probably in structural focus. So I think 188 gigawatts is something that we've got installed in terms of renewables at this juncture, expecting that to go up to 280 and 500 by 2030. So I think there is a long runaway growth. But again, I think the stocks have just zoomed off from where they were a few weeks and months back, and in stratospheric levels as we speak at this juncture. So anybody enjoying the momentum can enjoy. Fresh investors would need full.
Okay, this is absolutely no place to buy Ireda, but if you have it in your portfolio, do not exit. What we'll do, ladies and gentlemen, we'll shift focus back to the North Block. Chetan Bhutani joins us with the nitty-gritty of the budget. What is likely to happen in infrastructure, what is likely to happen in railways, as also in the defense space. A very, very good morning to you, Chetan. You look very, very busy.
Well, absolutely, Shailendra. It's been a very busy, yet a very rainy and a foggy morning for us reporters at North Block and Vijay Chowk respectively. Well, talking about the railway space first, yes, definitely a lot of buzzing and a lot of action is due to happen in the railway space. What I've heard from my sources is that up to 25% hike in allocation is expected for the railway sector. Remember, a record capex is due for railways. Remember, 2.40 lakh crores is what Finance Minister Nirmala Sitharaman allocated the railways ministry for various things last year, and this year it's an uptake of about 25% is expected. That's what the railways ministry had asked for. Usually about 5 to 7%. It's lesser than what they're usually allocated, but you never know in this government when the allocation could be increased. Even in the highway sector, it could be a 3 lakh crore record capex. In fact, for railways also, 3 lakh crore is what we are hearing that capex could touch. In fact, what the government will be using this money for is for providing more Vande Bharat trains. Remember, all the stocks that we are mentioning about are in green, are in buzzing only because the government is very upbeat on providing more infrastructure to railways, more capex to railways, allowing the railways to spend more money in various aspects. If I could probably read out a list of what my sources told me earlier morning, was a long-term infra projects for freight corridors is the key focus, improvement of speedier trains with key focus on safety. Modernization of fleet and locomotives is what my sources have also pointed out, and wagons and locomotives, 350 to 500 Vande Bharat trains is scheduled to be launched, and of course new trains including the sleeper trains, world-class sleeper train, bullet trains is also under consideration for the new government. Considering we have elections around the corner, the government will be having more announcements for in this space as well.
Chetan, for all that update as well, and we will continue to focus on the entire railway space that is buzzing in trade already in the opening action in the stock market. So we'll continue to get back to you to understand more live action from outside the North Block as well. But let's get back to our conversation with our market guests. Rajat, let me come to you for a quick word on what do you expect as far as the rural spending is concerned. Why I ask you is because Godrej Consumer Products, top moving stock in the F&O space. Of course, it's a reaction to the earnings as well. Dabur is moving higher. There's another news flow of Burman family picking up more stake in Religare. The Marico is also taking higher in trade. The Nifty FMCG is now 0.5% higher. Of course, the FMCG index has not done much in the last 1 year. But do you really see at this point in time it is imperative for the government to really think of reviving the rural demand at this point in time, and therefore by way of some measures they can spur consumer demand?
Yeah, no. So I'll talk about this and answer you purely from a stocks perspective. I think, as you said,
Sure.
FMCG stocks in the last 1 year have not done much, and consumption in India is one of the themes that anybody trying to build like a core portfolio should have these stocks in their portfolio. Well, today the only FMCG stock that you should be looking out for would probably be ITC, because every year around the budget, just like how railway stocks run before the budget, ITC runs when the finance minister will announce the taxes on indirect coal and what they do, if at all, anything to excise duty on tobacco. But yes, you're right. Like FMCG stocks have not done much, and all the names that you mentioned, whether it's Marico, in fact, HUL, ITC, these stocks are definitely something that you should add to your portfolio in this market.
Right, and this is probably the right time when you discuss Sakshi, FMCG counters, and Mayuresh is with us. And how can we not look at Bhikaji Foods?
All right.
I think Mayuresh, yes, Mayuresh will be joining us a bit shortly. But the right time to welcome Ms. Punita Kumar Sinha, Managing Partner at Pacific Paradigm Advisors. A very good morning to you, ma'am. What are you expecting from the document, and how does the market look to you from the lens of a foreign institutional investor?
Well, there are two separate questions. First, on the budget. As you know, it's a vote on account, so it's not a full budget. And so I don't expect it's going to do anything dramatic in terms of new initiatives, but we'll continue more of the same. I do think there will be some focus. The economy is growing quite well, so there will be some focus on reducing the fiscal deficit. There will be focus on social welfare schemes because we're heading into an election. I think the PLI schemes have done quite well, and Make in India and the whole manufacturing thrust that will continue to get the attention that it has got in the past. And I think in terms of capex infrastructure spending, there could be some more allocation to that. But I don't expect something very dramatic in the budget, given that it's not a full budget and only an interim one. On your second question on FIIs, well, India is a strong growth story. IMF has also just upgraded India's GDP numbers. So, at least from both the equity side, stock market, as well as strategic investment, there's a lot of attention being focused on India, and China has definitely, not managed their economy as well, and therefore there's a lot more interest in India. But of course, valuations are a concern. When I talk to investors, many of them are still quite worried about the valuations in India and are waiting on the sidelines, maybe buying into corrections. So this rally has definitely been supported by the domestic institutions, but the foreign investors remain positive on India. However, if you see that interest rates in the US might come down later in the year. So if that happens, then some attention and flows from the American investors could go back into America.
All right. Very good morning to you, Ms. Sinha. Help us understand, since you do say that valuations are a concern at this point in time, how and where exactly are you deploying fresh money in the Indian equity space?
Well, there are two very different segments of the market. India is a market within markets. So the small cap segment, which has really had so much euphoria, I think there is some froth there. But the momentum is so strong. The retail investor is really entering the market in an aggressive way. Whether, even the retail investors that are not professional investors or fund managers, whether it is a Kirana store guy, whether it is a fitness person, whether it's a medical doctor, everybody is now entering the market and focusing their attention on the market. So the retail flows continue unabated, and they'll only stop when they finally get burnt or there's a correction, which we've seen happen in the past. Sometimes there are corrections, and that's when people really freak out and then rethink their strategy. Domestic funds and the SIPs keep continuing. So as far as the momentum is going, the momentum is strong. I don't know what will stop it. There has to be some bad news or a trigger to slow down these flows. That doesn't seem to be happening. So for a while, it could be just markets could remain strong despite the valuations. Large cap is a space that looks relatively valued, attractively valued versus mid and small cap. Those stocks haven't moved. And to the extent that the companies are reporting good results, that's a space one should also be paying attention to.
Absolutely. Large caps haven't caught up with the fantastic rally that we've seen in small caps and mid caps, but that's a different discussion at a different point of time. We welcome another fine gentleman, Mr. A. Balasubramanian. He's the MD and Chief Executive Officer of Aditya Birla Sun Life AMC. Very warm welcome to you, Bala, and good morning. As Punita mentions that the inflows on the retail side continue to be very strong, and that I'm sure will bring a smile on the face of every fund manager who brings in this kind of money to the market. What are your expectations from this budget, and how are you seeing the broader structure of the market in 2024? We've had a very volatile January.
I think the way we see on the broad expectation of the budget is clearly the big achievement that has been falling in place on the fiscal side. Tax collections have been quite robust, both the GST collections as well as on direct tax collections, which now close to about less than 5% kind of numbers that we can expect. That's something is very good news, which essentially means giving more legroom for the government, continue to pursue the government expenditure for the purpose of building the infrastructure, the investment led by the government of India, both at the state levels and the central levels. I think will continue to be the driver, which essentially means the sustainability of growth as we move forward will be made it much more easier, given the tax to GDP ratios improvement. Second, my own expectation is given the fact that there has been increased level of compliance on the tax payment, there's also a high probability that below certain segment of the people, below say 7.5 lakh rupees or 10 lakh rupees, they may probably make it more no tax kind of things. Essentially means giving more money in the hands of people at the entry level or below certain salary levels, given the fact that the most of the people now getting into the working age group, and therefore there is high probability to boost the consumption. They may give some kind of income tax benefit, which essentially means one side, so far the growth has come from infrastructure-led growth, and we also need consumption-led growth which need to come, and for which I think the comfort is definitely coming from tax collections. So as far as the broad buoyancy concerns, I think in 2024 as we get in, I think buoyancy will remain given the fact that among the global economy, India continues to be in a strong footing. Therefore, the buoyancy will continue. I think domestic flows will continue. Whatever one may say that the markets have run up and so on and so forth, I think there has been increased participation, especially through SIPs, which essentially means the flow from domestic will continue on the rise, given the fact that we still have only about 4.5 crore unique investors, which essentially means we still have a long way to go in terms of getting more customers added to the capital market, to the mutual funds. Therefore, flows will continue. But as always happens, market, whenever it falls, it never come and tell you and it's going to fall. But suddenly it may fall for a variety of reasons. And that may act as good for the customers or investors to come in more at that point of time. So it will not, unlike the past, we will not see too much of damage in terms of sentiment, even if the market falls. Probably you'll see the convictions going up, therefore more participation could come.
Okay. Ms. Sinha, let me bring you in the conversation and now ask you, as far as the focus has been on the PSU sectors, now be it defense, railways, infra, now renewable energy, solar power, how do you see these sectors after the interim budget has been presented? Will they have a continued celebratory run-up?
Well, I think the capex spend in the budget and the investment-led thrust by the government, that is going to continue because, to keep up pace with our GDP growth, we need to have a lot more infrastructure. So all of the capex-intensive sectors that you mentioned, they will get some boost, in my opinion. Now, of course, many of them lie in the small cap segment. Many of them are highly leveraged. So one has to really be careful. But on PSUs, yes, they've had a really good run, and that's mainly because of the valuation gap between the private and the PSUs. And so everybody's hunting for value. Right now, everybody's agreed that the fundamentals are strong. So it's really become, interestingly enough, people are just watching technicals. And a lot of technical analysis is being incorporated by a lot of retail investors.
Absolutely. And Punita, you add very well in your previous answer that everybody in the broader economy seems to be now only fixated on capital markets. I know a lot of surgeons, a lot of doctors who now work in their profession beyond 3:30.
Yes.
Between 9:15 and 3:30, they are glued to their broking accounts and their trading accounts. But work begins post 3:30, and that's across the board. You go to Southex in Delhi, all shopkeepers are punting on the market. They're not really concerned about how the main economy is working, but the financial economy seems to be moving, and Bala has a smile on his face. Why not? Punita, the question that I wanted to ask you was that over the 18 months that we've seen gone by, quality at any price, the broader theme that we were brought up on, buy good quality, strong ROCE companies where you see low debt, decent 15-17% rise in profit and profitability. That valuation, that Excel sheet seems to have gone for a toss, and that's affected a lot of long-term investors such as yours, if you not in particular. But that impact has been telling on PMS portfolios. How do you see that change?
Well, the thing is that, as I said earlier, everybody's becoming a chartist. Everybody's looking at technical analysis. Quality doesn't seem to be coming into the discussion. quality at any price is also not the point, because it's not like people are buying quality. People are buying junk stocks as well. And what you see in the US, the meme stock rally. So there's a little bit of that happening. A lot of the more the leverage, the junkier the company, the more it seems to sometimes go up. So
Ask
I mean,
one
there is
about
fear
my
that some
monkey.
people may get trapped in it at some point. One of the things that is being ignored is the global environment, presidential election in the US, the geopolitics, the war, which seems to have escalated. The sea freights have gone up, oil prices have gone up, but nobody's really paying any attention to that. So if there is something worsening on that front, and there's withdrawal of liquidity, at that point, these meme names could crash like they did in the US, and at that point, people could get quite hurt. So I would think that people should be careful, definitely, because the retail investors in particular are just buying on charts and technical analysis.
Absolutely. There is an important question that's coming your way, so please do pay heed to that as far as intraday trading or risk trading is concerned in the markets, especially the options trading as well. Let's now also welcome another guest on the show. Devin Choksi now joins in, MDDR Choksi Finserv. Welcome, Mr. Choksi. Very good morning to you. Big day ahead. Tell us, what is the D Street going to be liking and looking forward to from the interim budget? What will make the markets even happier from the current levels? Would it be the fiscal deficit number, which will be pegged lower? Will it be higher capex growth, or will it be the market borrowing number? What exactly are you looking forward to in terms of the stock markets?
Yep, good morning. Well, I think my understanding is simple. This is a vote on account budget, and in this particular budget, only the intents are going to be spelled out. Not many outlines are going to be laid down at this point of time, in numbers particularly, because the government is very clear that they want to keep bringing up the entire economy from every corner, from the bottom of the pyramid, the kind of people, the masses who should get benefited. They are being given the consideration by way of, I think, the tourism economy, by way of agricultural economy, by way of, I think, the social infrastructure economy, and the projects therein are basically being continued. Another good aspect about this particular government in last 10 years, they never waited for the budget day to make their announcements. They've been constantly making the policies, and they've been constantly announcing and implementing policies all throughout the year. Budget is only becoming a medium to basically spell out the amount of money that they would be spending into that particular program which they announced. Say, for example, on 22nd January, Prime Minister announced a program of putting rooftop solar on 1 crore houses. Now, the budget may probably give the allocation of money to this particular program. Similarly, I think the budget may end up giving some kind of a allocation of money towards the renewable segment, where in the G20 sign-off meeting, the Prime Minister secured about $5.9 trillion from developed nations towards developing nations for carbon neutralization program. So over there, I think if the India becomes the strongest player in this particular space to attract large amount of towards renewables, and particularly towards green hydrogen, even if I think you end up attracting 10% of $5.9 trillion over the next 7, 10 years, I think it's a huge sum of money which you are going to get into the economy. So all these policies, all these programs, I think are always announced ahead of budget. Budget only gives shape by way of giving the allocation of amount towards this program. And in my understanding, the larger amount of allocations will happen in the full budget, which will come up in July with the new government. In this particular voter account budget, it is only going to be the outlines which will be laid down.
Okay. Devin bhai, that's the broader theme that you've talked about in terms of the structural changes that have happened and are likely to take place. I just wanted your understanding on how do you see sentiment on Dalal Street at the moment. We've seen a fairly strong profit booking on the Nifty from 21,230 to somewhere like 21,000. That's been a fairly decent correction in the month of Jan. How do you see the markets moving forward?
So whenever the foreign portfolio investors they pump in money, I think the market goes up with a higher amount of it, because generally I think the amount of money they are pumping in is through index fund, through ETFs. And that's where I think they increase the weightage. That's where I think probably the market takes the wind out of it. In the last month, we believe that they have withdrawn somewhere around $3 billion worth of amount, I think, through these funds. And that's where you saw the fall as well in the last month. In my viewpoint, I think the market fundamentals are intact and the growth programs in the economy continues to remain, I think, absolutely promising. Given that situation, I don't see market is expecting too many things out of this budget or vote on account budget, whatever we call it as. I think that the regular flow of money is quite assured with the higher amount of SIP contribution coming into the economy, higher amount of insurance premium getting collected in the economy, higher amount of pension fund getting allocated. So all in all put together, I think the liquidity remains intact in the market. And overall corporate performance remains, I think, quite satisfactory and promising. Maybe in some pockets, the valuations are going a little out of control. That is where you might have the disappointments in the stock prices. But otherwise, I think the market is fairly stable on many of these counts.
Okay, let me get Bala on the conversation as well. Bala, where exactly are you seeing monthly flows come in? How have the SIP flows continued to spike up for you specifically? We've been seeing 18,000 odd crore rupees of a figure on the nationwide basis. But for you specifically, what are the trends that you're picking up?
I think broadly the SIP flows is quite diversified between the large cap, flexi cap, and multi-cap funds. That's why I think broadly the flows have been coming. And we have also seen increased traction in the last few 6 months. Small and mid-cap have been the major recipients of flows, including ourselves in the form of SIPs. There is another two segment which I think will link to the broader theme, nothing linked to the the overall market. We can probably say which is the PSU funds is the one where we have seen a significant tractions given the fact that one is a thematic. I think the earlier question to Punita asked about PSUs, the view. Clearly, the PSU as a segment have not only done well, they also now become efficient and some bit of re-rating and becoming efficient. They have been the participant in the India growth story by way of being one of the partner in the broader execution that the government of India has been doing it, whether it is in railways or roads or missiles, defense. And there are many areas there has been a significant investment that has gone behind from PSUs. We have seen some inflows coming in the PSU funds. And last but not the least, given the fact that in IT as an infrastructure, IT as a company have done badly just about a year back, and now we are seeing a renewed interest with an expectation of interest rates coming down globally. There is a high correlation between interest rates coming down and the spending in IT. So therefore, IT as a sector is given the fact that valuation is good, balance sheets are strong, high cash flow that they have, their dividend payouts are good. So there has been increased attractions on the digital India fund as well. So if I have to look at it, and they diversified equity funds largely on large cap and flexi cap and multi-cap funds, and small and mid cap continues to come in the form of SAPs, and thematic funds. These are the two funds I am seeing actually good inflows coming in.
What you see on the right side of your TV window are the budget documents that are being offloaded from the government printing presses in the finance ministry, and have now come to the what is the old parliament building, Sakshi. 35 budgets to go, and that's my track record so far. This is my 35th budget as far as coverage is concerned. And
isn't it always special and always different? How would you describe it?
Absolutely, Sakshi. I can tell you the atmosphere in the Parliament building, the old Parliament building, has forever been electric. You would see the likes of Mr. Lalu Prasad Yadav talking in chaste Hindi on what the budget has done, what the railway document is doing, what the economic survey has done, depending upon whether he is in power or out of power. But the conversation used to be fantastic. We'll come back to what is happening in the market, and we have a very, very strong representation from the bond market as well. Bala, as we all know, has been a bond guy for a major part of his trading and investing life. Bala, coming to you, 2024 will see the entry of government bonds into the global JB Morgan index. How do you see that change reflecting on India's overall balance sheet, as also the fact that the US Federal Reserve has said that rates are not going to come down soon. How do you see that part of the market?
Clearly, I think the Indian bonds coming under the JP Morgan bond index itself is actually a prime moment for India. Essentially, getting recognized in the global bond index is something is very positive. But as it always known, I think starting from June, as the money starts coming in, probably I would say it'll have two good things. One, forex reserves would become a lot better, therefore it bring in currency stability. As far as the bond market concerns, I would probably say it's already priced in, given the fact that a lot of structures already started taking place in bringing in money a bit in advance through the structures. Therefore, as the money starts flowing in, we'll probably see a lesser impact as for the bond yields going down further, given the fact that the interest rate differential between US and India is one of the lowest. And even if we assume that there is going to be a rate cut this year in the US, we will not probably see the Indian bond yields rallying quite significantly, given the fact that the differential have to be maintained adjusted for inflation. And second, with I think the fiscal improvement may of course reduce the overall bond issuances. Therefore, they'll also bring in some kind of stability. Definitely in the bond market side, we see the flat that we are saying. I think 1 and 5 and 10 year model of the yield curve is flat, and 10 and 30 years also yield curve is flat, which essentially means we'll probably see marginal rate cut coming in India, say after say 9 months or so, and therefore bringing down the short-term interest rates, which is predominantly can help in reducing the cost for borrowing for companies, and therefore it helps in companies on one side. And from the bond market side, we could probably expect the rates between 1 to the 5 years coming down. Therefore, the curves become once again steep. So I don't see a 10-year bond yields rallying quite significantly, which currently is about 7.12, and below 7 may not sustain beyond a point. But I think short-term rates, there is a huge merit for it to come down, given the fact they are seeing a flat yield curve.
Punita, let me get your comment as well on the inclusion of India in the bond index in JP Morgan. How would you really see that as far as flows into India are concerned?
Well, I think the global bond funds and emerging market bond funds will obviously look to invest in Indian bonds, because that opportunity will have opened up to them. That wasn't the case. There wasn't enough liquidity either. So, but I would also say that, the rate cuts in the US are likely to be, if they happen in the summer and the second half, likely to be more than what we will see in India. So the bond market performance in the US would be decent, and therefore for those funds who don't need to invest in emerging markets or India, there won't be such a significant flow coming into India. I mean, the Indian real rates are, there is an inflation differential, but our inflation in India isn't quite as bad as we see in the US. And so the rate cuts that we would see there probably will drive better performance in the bond markets globally than in India.
With that, ladies and gentlemen, market today's first 1 hour of trade draws to a close. Thank you so much for your fantastic views on the broader macro balance sheet, as also expectations from the budget. Punita, thank you so much. We expect you will be joining us again post the budget and to discuss what has come in. Thank you, Bala, for the wonderful views on the bond market, as well as the views that are coming in on SIP. And Devan Bhai, as always, it's a pleasure to listen to your very fine thought laced with wisdom.
Thank you.
Okay, we'll come back to the markets. The Nifty Sakshi is up 24 points, 21,750. It's poised for the event. Volumes are pretty low, given the fact that people are waiting for the budget document to come in. Let's look at the components of the Nifty. L&T again in pain. This is the top loser in the index heavyweight space, 1% lower, 34.45. Pain in the banking space. ICICI down about 1%, Axis down about 0.5%. HDFC Bank, let me see, is flat out, 14.53. Infosys is mildly in the green, 0.5% higher. TCS about 1.5% higher, and Reliance absolutely flat, 28.57. Nothing happening on the index. It's just waiting for the speech to begin. But a lot of action in the PSU space. Look at HUDCO and look at Shipping Corporation of India.
Absolutely. The PSU stocks will be continuing to be in flavor, and probably there will be some announcements with relating to this space, and therefore this entire action we will continue to track. Meanwhile, when we talk about sectoral indices, it's the auto index that is up by about 1.5%. The top mover, FMCG, follows next. Now, IT space also 0.5% higher in trade. You have the small cap stocks that are just 0.3% up in trade. There's a mixed action. The mid cap index has slipped into the red as of now, below the flat line, and oil and gas is also buzzing in trade along with PSUs, but it's realty, metals, consumer durables, and the Nifty bank and the Nifty financial services space that is somehow in the red and not really enthusiastically participating right ahead of the budget, just waiting by as of now. So there you have it. New visuals coming in on your screens. Finance Minister with the interim budget document in her hands right outside the Parliament building as well. Very, very shortly, ladies and gentlemen, we will be seeing, Nirmala Sitharaman go inside and, of course, talk about what exactly should we be expecting from this interim document at this point in time. And she walks inside the door which has Satyamev Jayate written on top of it.
That's it, ladies and gentlemen.
Yes.
We'll pause for a while, and then, of course, the budget coverage continues on Market Today. Stay glued for the best market action that you can find related to the document.
Absolutely.
Thank you.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors. Darwin Platform Group of
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So,